Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Spencer, I think you have yourself on mute. I think you pulled the Joel.
I pulled a Joel.
You know what? We had to, though, because Joel's not here, so we had to
I
actually...
pulled a Joel. I apologize, folks.
It's okay.
You just
we had to do that.
saw my mouth moving, and
we were missing Joel, so we had to give you a little touch of Joel to start the week, because Joel's not going to be here this week, so we're giving you a touch of Joel to start the week. So start her over, Spencer.
Very smooth, Spencer. Very smooth. Anyway, as I was saying, welcome to this Monday edition of PreMarket Prep. Spencer Israel, Dennis Dick. Joel's out this week. So not that excuses my mute gaffe there, but anyway, moving right along. Our guest today, Tommy Lackey, he would join us at 8:35. He is the portfolio manager at Relativity Capital Advisors. In the meantime, S&Ps are up. What else is new? Oil is down, nervous, I think, heading into that OPEC meeting later in the week. Gold still at those levels from last seen like 8 or 9 years ago. And we'll talk about some M&A. We got some reopening trade. We'll talk about Disney. We'll talk about ADI. They're buying Maxim this morning. We got some vaccine news, as I mentioned, and we'll take questions from our chat. Dennis, it's not really a question of like what's up this morning. It's just what's not up this morning, right?
It's a few things not up, but it's Groundhog Day. I mean, it's the same thing. We've got multiple vaccine headlines driving the market. Overseas markets, China didn't do as great overnight, but it doesn't matter. So you come in here, Pfizer's got some positive news. You've got the same thing that happened last week. It's positive vaccine news. And just think about this. Like, think about the scenario if you're bearish. Like overall, like shorting the market because eventually it has to go down. I mean, it continues to ignore rise in cases. Deaths haven't been that bad yet. So maybe that's, a fundamental, reason here why the market, people who are trying to find, the reason why. But it doesn't need a fundamental reason why. We rally every time. We rally 300 points every time we get positive vaccine news. And if we get a little bit of negative news for whatever reason, we sell off a little bit, but we buy it right back. So if we're going to rally every time we get a positive vaccine headline, it's like the trade deal. Remember the China trade deal for 2 years? China trade deal is coming out. Oh, we got a deal. We rally 300 points on the Dow. Oh, we don't have a deal. Oh, we sell off 100 points. Oh, we got a deal. We rally 300 points. Well, you can add up that math. So if you're going 300, up 300, down 100, up 300, down 100, and you do it 100 times, you go a hell of a lot higher. So this might be the same thing with the vaccine going for the next year. So positive vaccine news, up 300. So we're probably going to get 50 headlines before we get a vaccine on positive headlines on vaccines. And if the market decides it wants to rally 300 points every time, this market's going to be a hell of a lot higher before we get a vaccine.
All right, so to the two headlines this morning, one probably bigger than the other. The first is the Pfizer BioNTech partnership. They announced that two of their vaccine candidates were granted fast track designation by the FDA. That's the big news. Also, Altimmune, ticker ALT, they announced that they had received good preclinical results, and they're moving ahead with a phase 1 study for their COVID vaccine candidate that'll start in the fourth quarter, they think. So,
did we not get positive Pfizer vaccine news a week ago? Is this the same? This is a different one, though.
No, there was something else last week.
We ripped on it. The Pfizer, and we can see the gap up in Pfizer when it gapped up. So going back to June the 30th, when the stock was 32.88 and it ripped up to 34.54 on July the 1st. So basically, what was the headline on July 1st?
No,
this is a different vaccine?
No. So it's not. It's the same thing. So on that day, on July 1st, Pfizer and BioNTech announced that they had received early positive data from their ongoing phase 1, I guess it's like a phase 1/phase 2 study of their vaccine candidates. So they announced good prelim data a week or so ago, and now, or a week and a half ago, and today they're announcing that they got the FDA's fast track approval. So not approval, but designation. So it's going down the pipes faster than it would have otherwise. So that's the Pfizer / BNTX story. I'll pull up the chart here so you can see that. But that's what we're talking about
So
here.
twice Pfizer. So in the last week, Pfizer gives a positive headline. Week later, that's rallied again. Another positive headline. It's again, it doesn't even matter. They just want to hear something positive about a vaccine. They're going to rip the hell out of the market.
Yep.
So it's tough. It's a tough gig to be sure. Somebody's asking, am I still underweight my long-term portfolio? Absolutely, I am. I've been underweight my long-term portfolio since 330 SPY, 320 SPY. I guess, I could just put out the whole risk back on and scalp 10 points and be done with it. And this was back from January. But I'm not doing that. I'm going to stay underweight my long-term portfolio because I don't get it. But as a trader, I'm biased long. I come in long. You got to come in, or you've got to come in on the overnight trading and you buy the dips. So like I said, I obviously am a trader. That's my source of income. Like some people have investments and they have a day job. So I have investments, but I also have a day job. My day job is trading. Putting my trader hat on, it's very hard to be underweight. It's very hard to be short. In your trading portfolio, it's very hard, not necessarily underweight, because I usually trade market neutral on my trading portfolio. So I shouldn't say I'm necessarily long, but I'm trading market neutral. But I'm biased to go, on Friday, you know what I was buying in the morning?
What are you buying?
I was buying coals. I was buying, like stocks like the airlines, like buying the junk. Why? Because when you get positive vaccine news, those are the stocks that are going to rally the most. So those stocks suck on most days. They've been underperforming tech on most days. But on the days that the morning you get the positive vaccine news, those stocks rally more than the others because they need it. Apple is fine. If the vaccine takes 2 years, Apple's not going anywhere. If the vaccine takes 2 years, American Airlines is going bankrupt, probably. So that's why they're going to rally a lot more on positive vaccine trials. So as soon as you hear the news on coming out, and this happens, it seems like at least once a week, maybe twice a week right now, positive vaccine news, the reopening stocks, the cruise lines, the airlines, all of those plays are going to be the ones that rally the most, at least on that headline. And that's what we saw on Friday.
Yeah,
those stocks were the strongest on Friday.
On Friday it was Gilead, so it wasn't a vaccine. It was because
it was a therapy. But
right.
Okay, so therapy, vaccine, obviously not the same thing, but both of those. That's what the reopening stocks want. They don't care. American Airlines doesn't care. Obviously, we get the bailouts they care about on an individual basis, but Fed action isn't as important as vaccine. Vaccine comes out. Everybody, if people actually take the vaccine, but the market thinks they're going to take it because the market thinks positive.
That's a whole separate issue.
Yeah, the market. Well, yeah, I know it's a whole separate issue. It's a whole other can of worms there because a lot of people aren't going to take it. But the market doesn't think about that. It wants a vaccine, and it thinks if vaccine comes out, all of the airlines and everything is saved, and that might be the case. I don't know if a vaccine's coming out next week. That's why I'm not investing in these companies. I'm not going and putting American Airlines in my long-term portfolio and saying eventually it's going to be back to $50 because I don't know the answer to that question. All I know is as a trade, when I see positive vaccine headlines, those are the stocks I'm going to grab for a quick buck. I'm out of almost all of those. I've sold, they rallied all day. So I held a little bit of calls overnight because I was like, I thought we might get some follow through, and I didn't mind the technicals. There was this huge $20 level on it, but I'll probably sell it today. So I held a little bit of that overnight, but that's the way you've got to look at it. The tech stocks, on the other hand, seem to go up no matter what. I mean, the tech has just been ripping. Eventually, there's going to be a wicked pullback, but what's going to happen is the pullback's going to get bought. Just like we saw last week, we had a wicked, down day where we're down 500 points that one day on the Dow. And what do? Less than 24 hours later, they buy it all the way back up. So guilty until proven innocent for the shorts here, I'll say. And I'm going to continue to buy dips every time we get them because it works. I screwed up back on the first. I thought that maybe we were going to start to care about the cases. I made that whole, I brought that presentation up, and I thought, hey, this market is actually starting to care about the cases. And I was wrong. I said I was wrong last week. Market doesn't give a crap about the cases. We got 70,000 cases. Florida's new cases. Disney opening didn't go well. Do they care? No, stock's up 1.5%. Like, talk about that Disney open. That didn't go well. Doesn't matter.
Yeah, I saw some videos over the weekend. It didn't, and I didn't get any numbers, but you did it. The videos I saw, it did not look crowded, which I guess is an argument for going there because it looked pretty empty.
Oh, yeah, it must be awesome. not waiting like my buddy Phil, who is big time Disney fan. He goes Disney World with kids every year, loves all the rides, and he's like, that Avatar ride, he said, typically takes 4 hours to get on, and people were getting on in 10 minutes. So it's got to be like, that's awesome from that perspective. And you know what? It's probably safer than right now with that few people. So the numbers that I saw, and these are not verified, but there was a financial publication coming out. They estimated that approximately 8,000 people went to the Magic Kingdom on opening day, which was Saturday. Was it Saturday? Saturday.
Yeah, that was the first day of opening.
8,000 people. The Magic Kingdom averages, here's some perspective for you. They average, on an average normal day, 57,000 people. So you're talking, I don't know if they capped it, and they didn't sell more than 8,000, but I don't think they capped it at 8,000. So I don't even know if it's sold out, and I'm not sure if that's verified or not. I'm just saying the number is 8,000 versus 57,000. That's that's significantly a lot less than they would have expected. And the videos we were seeing, the place didn't look crowded at all. So you would think logically, oh man, nobody's going to Disney World. This reopening didn't go well. The stock would be down today, but it's not. You know why? Because this market doesn't care. This market doesn't care what's happening right now. The market thinks we're eventually getting a vaccine, and we're all going to go back to our normal way of life. And Disney at $121, they thinks is a buy, because eventually those parks are going to be packed again. I don't know if I believe that. That's why I'm not investing in Disney. But as a trade, how do you argue with it? The bloody thing keeps going up. That was not a good reopening. Doesn't matter.
WDW Christopher in the Benzinga Pro chat noting that Disney is capping capacity at 30%. So
okay, but 30% of 57,000. My grade 2 math says that's significantly higher than 8,000. So did they not sell out on the reopening day? Isn't there a lot of people? I would think, at least for the first couple of weeks, that it would be packed, because there's probably people that have been itching to go. I'm like, oh, I want to go to Disney. And you're telling me the park's going to be at a third capacity? That's going to be awesome. I went to Disney World with my kids 2 years ago. I'll tell you something. The Magic Kingdom sucked. Why did it suck? Because we're sitting there. We're sitting there for an hour trying to get lunch. It is so packed.
You didn't do it right.
You can't get on any rides. You absolutely have to do the fast passes, and you're getting all the crappy fast passes when you're trying to do that. I mean, I did the Dumbo, and obviously my kids are young, so they don't mind the Dumbo elephant ears. But, you can only do that so many times. There's absolutely no chance to get on the Avatar ride. There's no chance to get on half these rides because it's too packed. So, I mean, right now, I almost feel like getting on a plane and going and take my kids to Disney, because we could actually enjoy some of these rides we couldn't get on before. If I wasn't so scared of COVID.
If you weren't so scared.
I'm too scared, though. I'm one of the people that's still tinfoil. My brother-in-law, tinfoil hat. I had the tinfoil hat. I had the tinfoil hat on in January. You guys were listening to the show, and I was scared.
Yes.
My brother says, "Oh, my brother-in-law, he's got the tinfoil hat on," but he's like, in March, he's like, texted me. He's like, "Where can I get one of those tinfoil hats?" You got scared. I'm still scared of the virus. I'm scared of the virus because I don't know. Maybe it is just the flu. Maybe it is just the flu. Maybe it's not the flu. I don't know. I'm scared of the virus. Obviously, I've talked about my kids. Spencer's very asthmatic. He struggles with the normal flu, and that's why I'm scared of it. But there's a lot of people that aren't scared. A lot of people aren't scared at all. A lot of people think it's a hoax.
All right.
Not a hoax.
Let's move on.
Is it as deadly as we originally thought? Maybe not.
I don't know.
Maybe not.
The confirmed case count has been rising for a month now, and the death rate has not been rising in lockstep, which is very notable. So
it is notable for sure, because we were riding a 5-6% death rate, which we knew was high. We always knew it was high.
Right.
We know we can comfortably say it's more than the flu, because New York had how many deaths in New York City? I believe somebody calculated that 0.2% of the population died of COVID, which is crazy to think about. I believe those were the numbers I remember.
Total deaths in the entire state. I can't get you the city. But
okay, give me the state.
Most of the deaths in New York were from the city or the area. It's 32,000 people.
30. Okay, so 32,000 people, and most of them are probably from Manhattan. So say 30,000. And you got what, 8 million, 10 million people there?
Call it like 12.
In any regard, it's well above 0.1% actually. So if you assume the entire population of New York City actually got COVID, which they didn't, the death rate is still higher than the flu just from taking those numbers. So the death rate's above 0.1%. But again, as we learn more about the virus, they're going to learn to handle it better too. The therapies, we've got remdesivir. That's helping. That's all the bull case. And, I'm really giving the rant that, hey, if the market is going to continue to shrug everything off, I can't be short. I'm not going to come in here and put my shorting hat on and say, well, eventually this is all going to come home to roost, because it might not. So I'm going to stay under invest in my long-term portfolio for the simple reason that I'm comfortable having the amount of cash that I do there. I don't want to go all in here at 320. I should maybe just rebuy it all and actually scalp, because I sold the majority of my stocks that when I raised all the cash. We know, if you're listening, I'm not making it up. I sold it back in January because I was pissed off because I sold it like 326 buy and 328 buy, and I bought puts. And then the market continued to go up for a month. And I was like, wow, that was a horrible call. And we went to 338 buy. So part of me just thinks maybe I should just reinvest and, be done with it. But I'm still sitting on probably 60% cash. It's a lot of cash. I'm always going to be 30% cash for the simple reason that I'm 45 years old. I went through 2008. I'm never going to go 100% all in on my long-term investment portfolio. The trading account, completely different story. Like, I'm always using margin. I'm always on, in my trading account. I'm always trading market neutral. I'm always using more money that's even in my trading account, but it's hedged. So I've been ranting here for 5 minutes. I can't give you the answer on how this story ends, and that's why I stay under invest in my long-term portfolio. But if you want to go all in here, that's up to you. I'm not going all in.
Oh, Dennis, we got a really good clue on Friday. What happened on Friday? Carnival reported, right? And
Yes.
of course, it was disastrous. But I'll pull up the chart here and you can see, because they reported like right at the end of our show. So we didn't get the chance to talk about it too much. But obviously, the bar was low. And they may have even come below that bar. Not that it really matters, because the expectations were disastrous and the numbers were as bad or worse as you thought they would be.
The market was very forgiving, and that's a good thing for the bull case again, because we saw the DHI and they weren't forgiving on it. Or no, it was KB Homes. We saw the KB Homes earnings and they slammed on it, although it's come back. But they were hitting some of the early the early ones on disappointing earnings. They did not hit Carnival Cruise Lines on the disappointing numbers, and that's a good thing. So you're going to come into some horrible bank earnings tomorrow. How do they respond to them? That is the big question. If they turn around and they see the horrible earnings and say, look, but we see light at the end of the tunnel here, and they start buying them, then you start thinking, okay, maybe I should start, putting some of the cash back to work here because they're going to start buying everything again. This market is very resilient. It has the Fed behind it, it has government money behind it. And now it's getting positive headlines from vaccine, it seems like, at least once a week. So it's hard to be short. Do I want to be all in long? I don't know. I'm torn there. But I'm going to keep trading it, buy the dip and sell the rip. And obviously that's working in the trading account.
All right. Should we move on to some news from this morning? Because there are some movers here that we haven't gotten to yet.
M&A, Merger Monday.
Yeah, a bit of a Merger Monday today. Let's start with the big one here. Analog Devices, ticker ADI, is acquiring Maxim, ticker MXIM. It's an all-stock deal, Dennis. So you ready?
Oh, yay. I love that.
Yeah. All right.
You know why I love that.
Maxim shareholders will receive 0.63 ADI shares for each share.
0.63 official deal, 0.63 ADI.
So look at.
You know how bullish this market is, though? Think about this. Okay, well, first I got to go look at the market caps here, because the market caps matter when you're looking at M&A deals, because what's the size? Was this a big pill for ADI to swallow or a little pill for ADI to swallow? So ADI market cap, bringing it up, unless you have it in front of you, Spencer. I'm a little bit slow here this morning.
I got Maxim. I don't hear.
You give me the Maxim market cap.
All right, Maxim is 16 bill. ADI is 44 bill. That's as
44. This is a big pill. So in normal markets before COVID last year, they were slamming any stock that was paying a significant premium for another company. They were just tuning them up. And look at ADI this morning. It's trading just flat. So they're not tuning it up. Could it go down a little bit because of this? If this was last year, if this was 2019, ADI would probably be down $7 or $8. But this is 2020, and we have a lot of bad things happening in the world, but not a lot of bad things happening in the stock market. And for whatever reason, they're giving it a pass here to ADI. Like I said, normally this would be getting slammed on it because it's an all-stock deal. The cash deals, they don't slam up. The risk arbs usually hit the acquirer on when it's getting acquired here. So you're slightly in the red here, but holding on fairly strong.
Yeah, as
I'm not going to go.
Say that, it went red.
Well, with some, and if you're hitting it, just because I said it, I know I'm giving the case that this isn't 1999. So I don't know. I have no position in this thing. I'm just saying, typically, when you have a stock being the acquirer for an all stock deal, and it's not like a little drop in the bucket, it's a significant portion of the market cap, the risk arbs typically hit the acquirer. So like I said, if this is 1999, I think ADI would be down $7 or $8, but it's not. And you know what? If it goes down $4 or $5, there's so many buy the dippers in there, they'll probably buy it right back. I have no position. I don't even know if I intend on trading it. It's difficult markets to use all of your former, statistical anomalies and to look at all your quantitative models and all of that, because this market's a little bit different than other markets. This market just trades on FOMO constantly. So if ADI is to pull back, they're just going to buy the dip probably on it anyway. So, and now it's not even pulling back. So that's my analysis on ADI. Normal markets, ADI goes down. These aren't normal markets, so who the hell knows?
And Maxim, you can just look at the discount they're pricing in this.
Yeah,
morning.
It'll trade off with a slight discount. So you take 0.63 times the ADI price if you want to do that. I'm too lazy to bring up the calculator, and I can't do that. I'm not as good as Joel, so I can't do 123.7 times 0.63 in my head. But if you want to quickly do it, you can.
There,
and that'll give you
$78.12.
What do you got for it?
$78.
So then you're looking at a 4-point discount here for Maxim. So that's what you're looking at, is risk arbs are putting a 4-point discount on, for one, the time value of money, two, the risk that the deal for whatever reason doesn't get approved and it goes back down. So it's actually a significant discount. That's typical though on these deals. Maybe there's going to be some antitrust issues. I'm not sure, but for whatever reason, the risk arbs are saying we'll price it $4 down. That's where it's at right now. Maybe the price it higher, but for the most part now going forward, you'll see Maxim trade with that 0.63 ratio off of ADI.
We got another SPAC deal again, Dennis. SPAC is
these SPACs are hot, man.
It's the trade of the summer. It's way less capital.
Market's so SPACy.
Think about it. If you want to IPO, IPOing through the traditional route is expensive. You have to pay underwriters and you build a book and it takes time. Or you could just do a reverse merger with the SPAC and
it's a cool way to do it.
Go public and like that. So that's the
what it just sounds cooler too.
Yeah, that's what Multiplan's doing this morning. They're a healthcare company. They are going public via a deal with CCXX. That's the ticker. So CCXX is going to become Multiplan when the deal goes through. You can see the pre-market action there. They kind of spiked and are off the highs of the morning. But this is your SPAC of the day. CCXX.
We should do that segment. They're talking. They want segments. SPAC of the day.
Well, there might not be one.
I know. I'm just messing with you, but these things go, man. When they get, it's something happening. Like we know, and do you want to tell them what a SPAC is? If we've talked about them multiple times. Some of the newer listeners SPAC, quickly define it.
AKA a blank check company. SPAC stands for Special Purpose Acquisition Corp. The entire purpose of the company is to IPO as a blank check, basically, and then within 2 years, usually they have to acquire a company, and they become that company. So
people are always trading these on rumors that we're thinking that this is going to become this. I've bought LCA. It's a SPAC because we already have confirmation that it's going to be Golden Nugget Gaming. I like the idea of the online gaming going forward. I see the DraftKings valuation. I see the Golden Nugget valuation. I think, why can't that be higher? So I have LCA in my long-term portfolio, not a trade, stuck it in the long-term portfolio because I believe in the online gaming story. I've tried to play this in different ways, like we talked last week before. Yeah. I've been a believer in the online gaming for a while, and in a pandemic, I think online gaming is even more important. Maybe the pandemic goes away and everybody goes back to the casino. Maybe people start gaming online saying, hey, I don't have to leave my home and I can still gamble. So, and obviously this is play on sports betting as well. So Houston, I keep saying Houston Rockets owner behind it. Yep. I think the valuation is cheap enough that I actually think this is a good investment. So I'm in LCA.
Yeah. So a couple bigger ones, if you were just new to the space, Virgin Galactic did this last year. They went public via a merger with this company called Social Capital. They were a SPAC, and then DraftKings did it a few months ago. There was a company called Diamond Eagle Acquisition. They were a SPAC, and they bought DraftKings. So essentially, the SPAC buys the company and essentially just becomes the company. So that's what's happening this morning with Churchill Cap. Something else. This is not a SPAC, but it is your high flyer, one of your high flyers of the morning.
What do you got for me?
The ticker is SSSS. Okay, so might as well be $4 at this point. It's Suro Capital. This is your Barron's influence here. Barron's noted over the weekend that this company has, I forget the number, I think 19% of this company's assets are invested in Palantir, which is Peter Thiel's company. They've been rumored to IPO for years. They apparently filed a confidential S1 with the SEC last week or the week before. So it looks like Palantir could go public. Finally, if that ever happens, that would be good for SSSS because they have a stake, as I mentioned. So this is up this morning on that news that they have that 19% of this company's assets they invest in pre-IPO companies, and 19% of their assets, I think that's the number, are invested in Palantir, which could or could not go public in the near future.
You see these funds that own certain non-private companies sometimes spike because the private company is going to become public, or there's some holdings in there. I can remember one. I can give you an example, and I had some of this, and I've got burned in it. Is First Hand Technology Value Fund (SVVC). I believe when Funware was a thing. Do you remember Funware? We were talking about this back in 2019. You can bring up the chart. PHUN, and it went from like $10 to like $500.
Wow.
Do you remember that? PHUN. Look at the chart and show the chart, Spencer.
Whoa, that was
from early 2019.
Yeah, okay, here we go.
And you saw SVVC, if you bring that one up too, during that period, it really popped up. You can see actually that it went from about $9 up to $14. That was a selling opportunity. I think when you see these things popping, and again, you're in this crazy market that things just get hot and stay hot, but this is something I don't want to invest in, because Peter Thiel's company might go public and they might have 19% interest. Yes, we love Peter Thiel. Yes, there's obviously some opportunities there, but I've seen this is on rumors. We've seen this stuff happen before. Could it continue to go higher? It absolutely could for a while. I think when the dust settles here, I don't want to chase something up 22% on a Barron's rumor.
I'm trying to remember. There was also one of these companies that had a 30% stake in Spotify, and I cannot remember. I think there was the ticker had a G, started with a G. If someone in the chat remembers, but there was a company that had a stake in Spotify. Spotify went public, and that was a trade. Basically, you could trade the company with Spotify as the IPO, but I cannot remember what that company was called. It was a couple.
I mean, I've traded these in the past too, like the Altab, like some that own the company and the other ones. Once they're both listed, then you can easily trade both sides of it, and then you can figure that out. But when you got a private company and they own parts of it, it's difficult because you can't obviously trade the private company, so there's no doing arbitrage with it or anything. But obviously, people are jumping in here speculating they're going to get a piece of Peter Thiel here, and that's why it's up this morning. This is a thin stock. So, could this continue to go higher? Yeah, this is very thin. It could continue to go lower here too. I don't know the path of how this stock goes. I just know when I've chased these things before, I've learned the hard way that usually you lose money doing that. So could it go 13, 14? It could go anywhere. I don't know the path. I think when we look at this thing a year from now, I don't think it's up at 12. I think it's giving it back, but that's just my thoughts, just my opinion.
All right, we're going to be joined by our guest here in about 5 minutes, Tommy Lackey. He is the managing partner and portfolio manager at Relativity Capital Advisors. In between now and then, let's look at some stocks from the chat here.
Yeah, let's do it. Take your time.
I mean, Tesla, Dennis, I'm not sure what you can say about it. It doesn't need anything to go up.
Doesn't need anything.
Yeah, not that there aren't headlines, there are, but the point is it doesn't really matter what the headlines are. They increase production and they lower the prices of their Model Y, which I thought was notable, but I guess does not seem to really care because you don't typically see stocks rally when they're having to lower their prices, but Tesla is not a typical stock.
I was very tempted on Friday night to just go and buy some Tesla just for the overnight trade. Because I was like, there's this thing over the weekend, people are going to see. So here's, the Johnny come lately trade is there's people have day jobs, right? They don't see it. And they're going to be headlines over the weekend on Tesla. And obviously, we know Elon Musk now worth more than Warren Buffett. You're going to see multiple headlines on it and people are going to come in on Monday morning and want to buy Tesla. And I was thinking Friday night, I'm like, with that move, that 140 point move on Friday, there's probably going to be some wicked follow through Monday morning from the people who are just like chasing it. And I absolutely wanted to buy it. I could not bring myself to pay, up though for it to take it overnight. And it was wrong. It was up 98 points. My one buddy at Bright Trading did buy it. and and obviously it's trading up 97 points. So good on him. I was literally very close to doing it just for the overnight trade, like just to buy Tesla overnight, just thinking that's probably going to have some wicked follow through because of everybody talking about it over the weekend. And it would have been the call. I didn't do it because I didn't have the guts and I didn't have the stomach for it, but it would have been a good one. So congratulations to the longs here again. I don't know where the story ends. I don't know where, you can't take valuation to it. Like I tweeted out a week and a half ago. When valuation, it doesn't matter. How do you value something?
Dennis,
you can't. So it's just trading on momentum, price, everything. I mean, you can sit here and crunch numbers all you want on it, but they don't care about earnings on this thing. They don't care. Like you were even talking about, they were lowering the price of the one car. They just which car? The one new one.
Yeah, the Model Y.
What did they do they lowered the price?
Yeah, they lowered the price.
Is that good? When they're lowering the price, what that tells me? It's not selling. Doesn't matter, because you know what? If Tesla misses the numbers, they'll find the silver lining. Or if it sells off a little bit, everybody will come in and buy the dip again. It's just complete, FOMO. It's just gone. So I don't know where the party ends here, but do I want to be short it? Hell no. Page number 1 in my book, if I ever write it, it's going to say, don't short stocks making new all-time highs. That's like just golden rule. They say the golden rule of this, golden rule of that. I'm going to say golden rule of trading. Don't short stocks making new all-time highs, because the momentum can continue for a hell of a long time. And everybody who thought Tesla was stupid at 1,000, it's now 1,600. It's went up 60% in 8 trading sessions. Can it go to 2,000? It could go to 3,000. It could go to 5,000. It could go back to 500 if the story cools off. This is a hot story that is hot as hell right now. I don't want to short any hot story. And you can take whatever math you want, whatever fundamental analysis you want to try to come up with a short thesis. Even talking, that they're lowering the price of their cars. Not good fundamentally, but it doesn't matter if the story stays hot. People believe in electric. They are absolutely the leader in electric cars. That story is real. That story is not going away. And people like to buy the leaders. And I just remember everybody talking how stupid Amazon was when it was $300 a share. And, here's a company trading 100 times earnings, doesn't make any sense at all. And now Amazon is 3,000 a share. So it's tough to just say that this is going down. There's been a lot of huge hedge fund managers that have been short Tesla and lost a lot of money. I believe, wasn't it Einhorn back when the stock was about $300 and he threw in the towel, I believe. But wasn't it? Didn't he say at the one, was it Einhorn? I don't want to, David, if you're listening, I'm not sure.
I thought he was still short.
Anyways, he came out when it was $300. He said, if you short stocks, I believe it was Einhorn, this was on $300. If you short stocks, how can you not be short Tesla? You know why? Because valuation doesn't matter. It's a story. Don't short hot stories. David, if you're listening, and I believe, is he still short it?
I think so. I don't think he's listening.
I hope he's not still short. I hope he threw in the towel.
I don't know.
The float is still 20% short. So there's some people who are short out here.
How about this? If he did exit his short, we'll know in a little bit here, because his 13F day is not too far off.
If anybody knows, was he? Yeah, but I don't know if this was over a year and a half ago, so I'm not sure. Maybe he threw in the towel a long time ago. I hope he did.
No, I don't think he did. I think as of the last 13F day, I think he was still short. So, or as of the end of the I guess the first quarter. So I could be wrong, but I think he's still short.
Wow. I'll just say Elon Musk is, possibly one of the smartest people that, this world has seen in a long time. So, the brains behind him, and Tommy Lackey is going to come on here in the next few minutes. Maybe we should bring Tommy. Can we bring him in right now into this conversation? Because he's in the chat and he's talking about, what Elon Musk does. I don't want to be short Elon Musk either. So there's a lot of reasons not to be short Tesla. The only reason to be short Tesla is the valuation's insane. But we know hot stories don't care about valuation. If you throw away the E and you don't care about the E, how do you get the P?
P, yeah, you need that E.
Price earnings. So I'm not going to be short Tesla because the momentum is just crazy. This thing, I can easily see this thing. Why can't it? It just went from 1,000 to 1,600. Could it go to 2,000 in a week? It could. I don't know if it's going to, and they're going to pull the rug out from under it one of these days. They pulled the rug out from under it. I did play it short, and I, got that little trade off of it. But it's hard. It's hard to short rocket ships. Hard making money shorting rocket ships. Tommy Lackey, let's bring you in. They're sick of hearing me talk. We need Tommy to talk for 15 minutes here so I can shut up. Tommy, how are you?
All right, guys. How you guys doing today?
What's going on, buddy?
A little bit of everything. Seems like a lot in y'all's space. You guys are excited every morning, it seems.
There's always something.
Well, usually Joel can talk a bit, but with Joel gone, now I'm doing more talking than ever. So everybody's getting sick of hearing my voice. So we got to bring the
try to
Tommy
butt
Lackey
in,
voice.
but it's like I can only butt in so
I'm
much.
wound up. Tommy
It's not
Lackey,
that
how
easy,
are
I
you
get it.
doing this morning?
Doing great. Doing great.
How are you
Just
playing these markets?
happy to be here and enjoy coming on with you guys. And I mean, the markets to me are, I've listened to you guys a lot in the last month, but it's really a testament of where we've come off these lows. And honestly, trend followers, however you may define that, have finally started really winning the game for a little while here, at least short term. And it's really a scenario of, and I put it in the chat a minute ago, something I've talked about for years, is I always try to look once I enter something and look for milestones that I can reassess instead of hard targets. And that's something I've preached a lot about since the bottom, is that basically just think of where we would be on a lot of these stocks if that very first hard target we set off the lows was our exit and we never got back in.
It's tough. And my long-term portfolio, I'm still sitting with a lot of cash. There's a lot of people sitting with a lot of cash.
And it is. And this was a really tough one to jump on. But on the other end of it, again, it comes back to, it's interesting. You hear so much about all these traders that want to trade, yet when they get that opportunity, the fear outweighs their knowledge, I guess, that they know they can be nimble. Dennis, you're doing that in your long-term account, but your trading account, you're still very active. Yeah. I feel sorry for the people who actually got out and didn't get back in. And they're pretty prevalent out there. Or they might have got in for that first 2 or 3% and then they were done.
Well, that's why every dip that we get, people are scrambling to get back in, because there's a lot of money managers that are probably underinvested here as well. We know there's a lot of cash. And with the amount of printed money from the Fed, there's even more cash out there. This money wants to find a home. And what do? You throw your money in the 10-year here and get 1%, or do you jump over, or less than that? Or where else do you go with money?
Well, again, I think it goes back to how you get your data and how you do your research. I think we are finally getting back to that point, Robinhood traders aside, that the people who are really willing to get in and dig in and do the deep research are still finding these opportunities, and they're still out there every day. I had some wonderful setups going in this week, both in ETFs and stocks, and coming all the way down from the macro level down to themes. Now, I do it a little differently because I start with a very macro view in the ETF world, and then I start working my way all the way down to the little niche theme. So to me, it gives a wonderful view of exactly what's going on, where money's flowing, both breadth and relative strength. But if you're an individual who just does individual stocks, then just make sure you're staying really well on top of your scans and you're still doing them every single night, even if you don't have any room to buy anything else. It goes back to really keeping your feel on the market.
What are you looking at? You say with the macro view to start. So where are you looking? What sectors, what ETFs are you looking to start? And then maybe we can break down into some individual names.
Tommy, I'll pull up your relative strength scan that you sent over, your ETF.
Yeah, let's do that.
Pull up one of the ones I sent, and while you're pulling it up, I'll go ahead and talk. Is that I start basically with world ETFs, and I rank them versus each other, and then I do an inner market, which has stocks, bonds, commodities, the dollar, all of that. John Murphy's inner market analysis type stuff, and I rank them versus each other, and then I rank value and growth versus each other, and then I start getting down into sectors. So I already know whether we're top in the world or not, whether equities are top in the inner market view or not, and then we get into the idea of whether growth is leading value or not, and from there we can start breaking into sectors. Now, what you're seeing right here is this is a group. And now let me say my relative strength real quick for those who don't follow me. My relative strength, that RS you see there, is my own calculation. It is a 3-month front-weighted calculation, okay? So it's a very fast relative strength calculation. So this is designed to help me get turns, help me find things when they're starting to turn. It's especially great when we have really bad markets and you start to see things start to move up this list. It shows that they're starting to outperform. And the list is versus everything else that's on the list you're seeing. So this one you're looking at, these are the top 25 relative strength in a list of 120 curated sector ETFs that I follow. It covers all sectors. In every sector, it has one small cap, one equal weight, one cap weighted for the sector, and then all the major niche players like gaming, oil services, all the niche players in each sector as well. And then that's 109 or 115 ETFs. Then I rank it in my ranking. So here are your top ones. And the bottom line is internet has dominated for almost 3 or 4 weeks. I mean, dominated. Whether it be social, SOCL, whether it be that iBuy, which is internet online retail, all of those types of things has really been your dominant factors in the market. And that has not changed. So there's no real reason to move away. Now, if you're one of the individuals who doesn't want to do ETFs and wants to do individual stocks, you can take this scan and just go to ETF.com, put in the ticker, and it's going to give you a list of the top 10 holdings in whichever ETF you put in. So then you can go all the way down. But I like using this because, like, I have an ETF that's specifically on 5G, an ETF that's specifically on robotics, and one that's specifically on gaming as far as gambling type casinos. And by basically ranking those things against each other, it allows us to see pretty much every day where money is flowing in and out based on a pure price derivative. It's not some other indicator. It's a derivative specifically of price ranked against whatever securities I decide to put in that batch at that moment. So it gives really clean views.
So of this list, I see a lot of tech. I see a couple commodities, but one sticks out to me that doesn't seem like it really fits, and that's ITB, the iShares U.S. Home Construction ETF. I guess of the ETFs on this list, this one's not at new all-time highs, but
but it's been strong as can be during the downturn. And that's, again, remember, this is a 3-month relative strength. This also shows, if you think of 3 months, this is going to show who's performed the best off the bottom. Now, is it at all-time highs? No. But from the stance of comparing it return-wise and all that and how hard it's come off the bottom, it's been one of the stronger players because it did drop so hard because everybody felt housing was going to be dead. Yeah. It did not die. And again, that's the key here. It's not about all-time highs. It's not about that. This is about alerting me to charts to look at. And I love this chart right now. It's very tight. It's, it loosened up earlier, but it does not want to give up, even with, again, the fear of people not paying rents and the whole mortgage situation and all that. It's not giving any room at all. And then if you dig down into some of the housing companies like Beazer Homes and some of those, you got some really nice looking charts in there.
Let's go to the opposite end here. Let's look at some ETFs that have really weak relative strength, and I'll pull that up here in a second. Some funds you want to have on your radar from the short side, or just stay away from the long side.
Is there anything that's been weak?
Well, one good example here is seeing how much energy is already showing up on this list again.
Right.
And you're starting to see a lot of that. And then the banks are still down there. But I pay attention to the energy specifically because it came so hard off the lows. So the fact that it's already, because it went up into the 90s about a month ago in relative strength off the lows, but it's already back down to the bottom of the list, that tells me that that was more of a dead cat bounce type situation. And so I would be watching it for continue to roll over. Of course, you have Jets in here and some of these other players. I'll tell you, one of the interesting things to watch here is, and I'm not ready to get excited about it, but notice the banks down at the bottom, the regional banks and all that, are still at the bottom of the list, even after having 5% days on Friday. I will take note of that. It doesn't mean I want it for a long term. But again, if you jump in and start looking at some of those charts, the way they've pulled back, the RSI has gone on the daily. It went to a bull range and it pulled back right to 40 and it found some support there. I would say that we could very likely see some strong financials here for a few days to a week to bounce out of this based on what I'm seeing on the charts after seeing it at the bottom of the list. So even though it's big weakness on this list, again, a 3-month relative strength, you still sometimes can find your pullback plays or find you some good support. This just draws my eyes to what's moving.
So 2 questions. One is, obviously we see 2 different lists here, and you can very much see the themes here is technology driving the bus on the relative strength, and these are a lot of reopening plays that have actually been very weak, despite their wicked rallies, that we talked about in early June. A lot of those have given it back. Are you looking at it from a contrarian perspective when you're coming in as an investor, or as a momentum trader?
Those are your top and bottom. Those are kind of the scenario. This is your best and worst. I send a couple other lists that are shorter that are called RS gainers and RS losers, that basically are the ones to where I see the relative strength points move more than 20 points over a 5-day period, up or down. Those are the ones I like to look at more from an entry or exit or pullback type standpoint a lot of times, because they're the ones that are really standing out from the crowd. It's like, okay, this is very different. Something's not like the others. This is very different than what everything else is happening. So let's go to those charts. Sometimes the charts are too extended, but a lot of times it gives you a nice little initiation type phase in those charts. The one y'all have there, the RS gainers. Let me see if I can grab it real quick so I can make sure I know which one.
This is the one with rare earth, a bunch of energy on here, some food and beverage. Is that what we're talking about? I'll pull it up.
I believe so. It's basically the one that on the right side of it has a lot of light green 20s.
Yeah, okay, I got you. Here we go.
And that gives you an example of, this is the RS gainers list that he's going to pull up here. This gives us an example again of basically these are some of the things that are moving right now. And like fan is your not solar, but your wind energy, coal, the one of the pod ETFs, and you got a couple staples down here. Now again, these lists don't tend to get very long because you have to move that's a lot of points. 20 points or 25 points is a big move in 5 days. So it's something that just kind of notes me to them, and then I can go back and look at the rest of the criteria and see if it's acting the way I want it to. But with those, I'll do that. And then, but considering as well, the losers list, which is the next one, it basically is when they pull back as well. Again, Dennis, you can't take it as a pure thing and say, okay, these are pulling back, so that means they're losers, or these are losers, so that means they're bad. You've got it just alerts you to the chart and says, okay, let's go to this chart and see what might be cooking.
We're live with Tommy Lackey. He is the managing partner and portfolio manager at Relativity Capital Advisors, sharing with us his scans that he uses to look at the market and sort of have a top-down view and look at ETFs and determine which themes are hot, which themes are not. Tommy, just real quick before we let you go, how much will earnings season, like we're getting banks tomorrow and Wednesday and for a few days here, how much will earnings affect the standing of the bank ETFs on your scans? How much of effect do they have?
Again, I think we got to go. I think this earnings is one that you'd be kind of silly to go in and try to project how we're going to react to them. This is the one where we're really going to start getting the numbers from how people are kind of settling into this new normal and their earnings and all that. How will it affect banking and those things? I mean, I think, again, those are going to be some tough earnings, but on the other end of it, I would not be surprised if we saw finances jump anyway, just because of the technical structure. Now, one thing I've heard y'all talk a lot about, and I want to mention here, and I'm going to divert this a little bit, Spencer, I apologize, but y'all talked a lot about breadth being weak over the last recent. I've heard some of that in the morning, and financials not participating and all that. We've got to really be clear about this, is that financials are now only 13% of the market weight out there. But yet there's still almost 900 and something companies. Okay. So think about that, how much that's going to affect market breadth without actually affecting market price as much as it used to. And yes, they're still important to be somewhat as part of the game, but you've really got to focus on the fact that they are not going to be a market driver anytime real soon. And they can be something that will temper the breadth numbers that I run and all that. And you have to take that into account. When 13% of the whole market cap is not performing, you can't say the markets are, not doing well. You can't put that there. Yep. But because there are so many small financials out there that are still considered listed companies, they tend to outweigh Brett a lot more than most other sectors.
All right, we've been on with Tommy Lackey. As I mentioned, he is the managing partner and portfolio manager at Relativity Capital Advisors. Tommy, as always, thanks for the time, thanks for the scans, and stay safe.
Thanks, guys. Y'all have a great week. Good luck out.
All right, let's go to some stocks in the chat here. A lot of people asking us about Workhorse, so we'll do that one. There was a couple of headlines this morning. First, they caught an analyst, a price target raise from Roth, but more importantly, they received a designation from the California Air Resources Board. They received the all-electric delivery trucks, their C series basically, was awarded the designation that allows them, I guess, to produce, to make cars, and I guess I'm reading through the PR right now, but seems significant based on the price action, is all I'll say.
Really torn on this one. Obviously, I played it thanks to Mitch a long ways. I sold the last of my stock up at 21, I think, 21.15 on that big red candle day because I felt like the story was going to cool off, and it did. To knock it back in. What I will say from a technical basis, you did not breach the low. So on Friday, we held the low of the move, the 14.11 back from the July 7th, which is critical to hold. That's the line in the sand. Below 14, the stock would be in trouble. It's good that it gets a headline. It's bouncing out of here. Could the story get hot again? It could. Interested. I'll say I'm interested. I'm not probably chasing it up $3, but again, sometimes these things just go and you miss them. And I mean, you can't, when you don't chase, you can't worry about the ones you miss. Sometimes you're going to miss them. Sometimes, the train keeps rolling down the tracks. We talked about entries on Friday in a segment. Sometimes you're going to miss them when you don't chase, but I'm more comfortable that I don't want to get into a situation where, I get chased and then fall under the tracks. So I'm interested on a pullback. Again, if I was buying it here at 17.80, I really can't stop myself out until 14 because that's the low of the move. Okay. So, and I don't really want to risk $3.50. So I think if I got this down, it's the lower 16s, I could manage that risk better and maybe I'd be interested in it. But it's on my watch list right now. So if you're in it, I would stop myself up below 14. I'm not in it. I'm not going to buy it here up at 17.74, but I'm interested. So I'm not saying it's a sell either.
All right. I sort of butchered that headline, but the bottom line is this designation allows them to sell vehicles in all 50 states. So that's the bottom line from the PR this morning. Okay, more tickers from the chat here. Someone asked us a while ago about Sherwin-Williams, so we'll look at that one. SHW. I have not looked at this chart. I have no idea what it says, but we were asked about it in the chat, so let's pull it up and take a look.
I mean, breakouts have been working. This level is so big on Sherwin-Williams, and to go back and look at the monthlies, and if we go back to November of 2019, you'll see a high of $597, and then you'll look at $599 back in January of this year, and $598 a week later, and then you look recently, and it did try to take it out at 603, but then it sold off and failed again. The $600 level is absolute huge resistance for this stock. It remains resistance, been resistance for a year. Resistance is resistance until it's broken. If this thing ever starts trading 605 to 610, then it would be in breakout mode. And breakouts have been working. This has been a market that sometimes breakouts, and in some of these cases, breakouts have started to work again. They haven't been working for the last year and a half because SPY has just chopped around a lot. But they're starting to work again. So I would get interested in this if it broke out through the 605 and that all-time high, which I believe is 603 through 36. So starts going above 605. I'm interested, but I'm not going to buy it anticipating the breakout, although it might, because it's failed here multiple times before.
I got tickers flying at me in all three chats, so I'm going to do my best to get to as many of them as we can. Mitch has asked us actually for a while now to look at Overstock, OSCK, and I keep forgetting to bring it out. Sorry, Mitch, but we'll do that now. Overstock is just a beast.
It's just a beast. It's in beast mode. It was a stock that everybody had for dead, including myself. When this got down to $2, I thought the story was over, and obviously it wasn't. We know that crypto is a little bit of a crypto play here as well. Yeah. I don't know if that's been the driver for the recent rally, though, because you think about Bitcoin, it hasn't really gone anywhere. So usually, when you were looking at overstock a year and a half ago, you're thinking, oh, Bitcoin's up, overstock goes up. But and where is Bitcoin? Were we over 10,000 yet, or we still haven't even got there?
We are at 9,375. So no.
We're still kind of the same spot. So overstock's just running its own ship here right now, and it's been in beast mode here. I'm not chasing it. It's just been running and running and running. But if you're in it, trail up your stops there. Trend is your friend. Trend is absolutely still higher. I don't know where the ship stops, but wow, it's been an impressive move.
Yeah. All right. Moving on here. I'll get to a few more. Let's see if I can look at. All right. So here's an interesting thought. I'll read this to you, Dennis. This is from the Benzinga Pro Chat. According to user B Money here, okay, there is a national. This is what he says. There's a national coin shortage in the U.S. right now. The shortage is getting bad enough that several businesses are beginning to ask for exact change at checkout. Could this create increased demand for metals like copper and nickel to provide a catalyst for stocks like VALE? I haven't heard about this, but I'm interested.
I'll just do a technical. VALE you want to look at?
Yeah, LA.
I'll just do the technical on it. Again, it's an ADR, so obviously this trades. I believe is this South America?
Brazil.
Yeah, so South America. So trades along, in similar time to our markets here. Because obviously when we look at European stocks, they're trading 5 hours before us. This is not the case because it's trading down beneath us down south. Again, above all those highs, you got 1132, 1130, 1126, 1128. That's your major resistance point, just above $11. What does it do there? Does it get up there and fail again? You're kind of in the middle of nowhere until you can start getting above those highs. So I say from a technical basis here, I don't follow the headline. I'm not going to comment on the headlines. I'm not going to comment, on any fundamental thesis because I don't follow the company close enough from a fundamental basis here. I'll just say above 1130, you could be in breakout mode. Until it gets above that, I'm not interested.
And also they had that mine disaster last year that they're probably not done with yet in terms of litigation. So I'll keep that on your radar for anyone trading VALE. What about Fastenal here? This one is off the highs finally. Yeah. So there may be some levels of note in Fastenal.
Just been an unbelievable stock, a stock that I've always want to have in my long-term portfolio, and I've never put it in there. Nuts and bolts of the market, I joke, because obviously this is the nuts and bolts of the construction industry. It's trending up. It's pulled back. I think eventually, if the market continues higher, Fastenal does too. It's a bit of a reopening play. It's a play on construction, but we know there's still lots of construction going on here. Fastenal's been an unbelievable performer. If I was long it, I would want to stop up below $40, but trend is absolutely still your friend in Fastenal.
All right. Everyone keeps asking about Wayfair. We'll do it. This is a ridiculous headline here from over the weekend. They're the subject of a insane conspiracy theory post on Reddit, which if you are passively familiar with Reddit, it's a place for, I'm on Reddit and it's a place for crazy things and people, myself included. So they're the subject of this ridiculous conspiracy. The stock is down this morning though. So I can't believe it's actually having an effect on the stock, but yet here we are. This to me would seem like a buying opportunity in Wayfair.
Yeah, on a normal stock, but it's just the stock has run so far. It was $21 3 months ago. It's $220. It's up 1,000% in 3 months. It's been such a mover. Trend, absolutely your friend. Buying the dip on stocks and uptrend seems to work. If you are inclined to come in here and buy the dip, people have already been inclined to buy the dip because it was a lot lower than this morning. How low did we get to in the pre-market, Spencer? Do you have that information in front of you?
Yes, let me get it for you. We got
just show the interest, show the overnight chart, and be able to
low of
$200.
Where am I? Sorry.
It's just going to show the
215. 215 is the pre-market low.
Okay, so if you're buying it, know that the pre-market low was 215. You start to get through there, then it starts to get slippery. But this trend is still up. Above $200, bulls are still in control. Buying at 220, you got to give yourself down to at least those lows, those three little lows that we had a week and a half ago, 193.69. That's 15% lower. I don't want to lose that much. So that's why I'm not chasing it up here. I mean, you could also use the recent lows, and it's kind of like the Tesla example, but we were trading below that this morning. Yeah. Let's see if they shrug this headline off. The stock starts breaking out, and we start making new highs. If it does, it gets through that 231. Then I would stop myself out at the recent lows. It's like 4 or 5 lows here at 218. So you do have some support at 218.
All right. I tried to cover as many questions or tickers as I could. I apologize. Can't always get to all of them, but that's why we have another show tomorrow. So I'll wrap it up here. I want to thank our guest, Tommy Lackey. Thanks to all of you in our chats, all three of them. There's a chat on YouTube. There's a chat on benzinga.com/premarket prep. And there's also the chat on Benzinga Pro. We appreciate you, all of you. Please like our video, like our channel, subscribe to our channel. That helps us a lot with the mysterious YouTube algorithm that runs our life. So we appreciate that. You can always send us an email for any feedback, good or bad. We appreciate it. premarket@benzinga.com is the email to do that. And please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Monday. We'll be back tomorrow morning. In the meantime, stay safe and good luck.